Hey guys, just wanted to come at you guys with a quick mortgage market update for June 2021. It's early June here. Hope everybody had an amazing Memorial Day, and thank you very much to our nation's military and those who have served in the past who have given the ultimate sacrifice so that we can enjoy our freedoms. We really appreciate everyone in our nation's military. Thank you for all that you do. Um, some quick housekeeping things. Congratulations to everybody who's featured in Boston Magazine's Top Producers issue 2021. What an honor. You guys all deserve it. Everybody's working super hard out there to help clients get their homes ready to sell, how to figure out which offer to take. For all the people that are all the clients out there that are trying to buy a house, working with really great real estate agents that are helping you navigate this new market and how to get your offer accepted and giving you the advice and the emotional support and the strategy and all those type of things. So congrats to all you guys out there. We work with some really great professionals. The secret to our success is obviously our amazing clients, but also our amazing real estate agent network that we work with. So congrats to you guys. Everybody go out there to the newsstands and buy a copy. Go on the internet, check them out, support them, congratulate them, give them a pat on the back. They all deserve it. It's been a year. And lastly, we got our June Mile a Day Fitness Challenge. You guys know that we like to have fun and we like to promote well-being. So we want everybody to get out there and get a mile in, walk it, run it, sprint it, bike it, whatever. Just do something to get out there and enjoy the beautiful weather. And let's have some fun with it. 3 things you need to do. 1, download the Strava app. 2, join our team. We're going to put the contact information on here in terms of how to join the Shant Top Agent Club that is doing the fitness challenge. And lastly, just get out there and get some movement going, have some fun, share it, promote it. It will encourage others to do the same and get everybody a little bit healthier than they were yesterday. And hopefully some fun and some laughs and all sorts of good vibes. And lastly, thank you to everyone who participated in last month's Random Acts of Kindness that Guaranteed Rate got behind. I thought it was really amazing. It was special, and it was really cool to see some of the things everybody came up with. So thank you guys for that. We're always trying to figure out new ways in which we can give back to the community that always supports us. So thank you for everybody that participated. All right, some mortgage news. We've got a lot going on. They try to keep it quick. So some of the data that's coming out right now is interesting because we're comparing it to a year ago when things got eerily quiet in the months of March and then April, and then they roared back in May and June as people's motivations changed and needs changed as well. Because we're at the very beginnings of the pandemic, and we saw a massive onslaught of people wanting to move and buy and relocate and all that kind of stuff. So overall, application volume actually, believe it or not, decreased year over year in 2021 versus 2020. But if you think about it, again, market completely shut down last year. In April, like it was like nothing was going on. So when you're comparing the numbers and parts of March, when you're comparing the numbers, you're comparing it to the surge that happened to make up for those lost months that we had. So it's busy out there. I mean, we're talking to as many people as we've ever talked to, people that are interested in getting pre-approved, and also, obviously, home buying activity is really, really strong. More inventory starting to come on, so that's also been a great thing. June historically is the biggest purchase closing month of the year. So everybody buckle up because there's a lot of closings happening in the month of June, and they're all happening fast. In fact, here we are, it's June 2nd, and we're still taking closings that are closing on June 25th, June 30th, as people want to get into their homes before July 4th weekend. It's always a big motivator to get in as school ends and get into your new homes, to have the summer to prepare and whatnot. So good luck to everybody in the month of June on all your purchase closings. Purchase applications are actually down 2% last week and down 4% from this time last year. So, again, same thing. It's just comparing it to last year when the surge happened. A surge is still happening. Very minor change. There's still massive motivation out there. Refinances were also down 7% last week compared to the week before, and showing a year-over-year decline of 9%. We're still seeing massive uptick in refis. Here's what I'm seeing. There's a lot of people that got nervous when rates kind of ticked up back in February. If you weren't paying attention, rates almost went up a whole point from February 15th to March 15th, and they've trickled back down. And rates are still amazing. Anytime you can secure a rate with a 2 in front of it or a low 3 in front of it, historically it's amazing. So we're seeing a lot of people that had that fear of missing out on that first wave of refinances getting in now. The other thing that we're seeing on refinances is a massive increase in cash out refinances, as people are seeing home prices have appreciated, which means our clients that have homes have equity and there's needs there. And clients are doing cash out refinances, to pay for home improvement projects. Everywhere I drive, I see dumpsters and contractors. And, I'm talking to my clients and I'm hearing it's so hard to get a contractor. They're 6 months out, a year out. It's because everybody's doing home renovation. So if you don't want to tap into your savings or your investments to do the projects you want to do, or if you just don't have access to those, a cash out refinance is a great way to get the cash out of your home to fix repairs, updates like kitchens and bathrooms, additions, all that kind of stuff. We're seeing also a lot of clients do some debt consolidation, whether it's paying off some student loan debt or credit card debt, things of that nature. And then lastly, a lot of our clients are trying to plan their next move, whether it's buying a new second home, buying an investment property, or just taking the cash out of their home to plan for their next move, whether it's the down payment or the earnest money deposit on a next home, whether they're upgrading, downsizing, whatever, but just having access to that capital from your equity up front is a great way to get prepared for your next move. Refinance activity in terms of closings, we're starting to, that's about 60% of the closings right now, because a lot of the pipeline, even believe it or not, from last year for some lenders is still closing out, and even from the beginning of this year when rates were really amazing. In terms of new rates, new locks going in and new originations going in, what I'm seeing is about 75% purchase and only about 25% refinance. Although there's a lot of people out there that should still consider refinancing. We're doing our annual reviews right now, and I'm still blown away. We locked in a client yesterday on a refinance rate and term that had somebody at 5%. I talked to somebody else that was still sitting around out there with a rate, believe it or not, in the sixes. And then, there's a lot of people in the fours, even high threes that should be considering another refinances. So if you're one of those people, we're doing our annual reviews. There's no cost. There's no obligation. It generally takes like 5 or 10 minutes to do a really thorough review of what your options are. So we're happy to talk to you. Here's what we're seeing. Our friends over at MBS Highway released some good information. So FHFA released their house price index, which measures home price appreciation on single-family homes. Home prices rose 1.4% just in the month of March alone. And check this out, 13.9% year over year. That's a huge number. I mean, we're seeing it with the clients that are bidding on houses, and we're seeing things go regularly over asking price from $50,000 to $200,000 to $300,000, depending on the price point. So you're definitely starting to see the numbers change in terms of home price appreciation, but 13.9% year over year home price appreciation. If a buyer wants to purchase a home, in my opinion, now is still the time. I'm forecasting, and everybody seems to be forecasting, continued home price appreciation. Also, keep in mind, at some point, some of this inflation data that we're seeing is going to cause rates to uptick. So buying a home in 2 years or 3 years when homes are more expensive and borrowing costs more expensive is kind of daunting if you think about it. So I think getting in and not getting overwhelmed by the current market, being prepared and knowing your numbers is key. Right now, I think it's still an amazing time to buy because I think it's only going to get more expensive, both on the home price and also on the borrowing cost. Certainly if home prices stay this hot, we see 13% and 13% and 13%, stuff like that, double-digit home price appreciation. Could there be a slowdown in the next couple years in terms of home price appreciation? Certainly, but I still think it will be more expensive, then than it is right now. Bottom line is right now, supply and demand dynamics are not changing. Homes are selling faster than ever before. So check this out. On average, homes are getting 5.1 offers, right? And, obviously I'm seeing it live, talking to our clients every day and talking to our real estate agents. Some houses are getting 20 to 30 offers. And we're hearing things like waived mortgage contingencies, no inspections, quick closes. Certainly we can help you prepare and understand all of those things and understand the risks. And we're doing that every single day. I think one of the things that we pride ourselves on is really getting our clients prepared and knowledgeable about what risks they can take comfortably, what risks they shouldn't take, and what it all means for them. Really just kind of like dissecting their offer and their negotiations and helping them either go all in, be more confident, understand what's going to happen, or maybe take themselves out of this specific negotiation if they have to. I don't see a repeat of the bubble days. I'm going to cover that at the end, but bottom line is one of the reasons is mortgage underwriting standards are stricter than ever. A lot of things changed after the crash in 2008. And bottom line is the other thing I'm seeing is, I'm looking at my clients' credit. There's less debt out there because there was a lot of savings last year. And a lot of times, last year, a lot of our clients were spending less. And so they use that opportunity to save and obviously pay off some debt. On top of that, incomes in certain sectors, especially things like tech, finance, biotech, income's actually gone up in a lot of you know, certain economies, both geographically and also in certain, employment sectors. So we're seeing a lot of clients, take advantage of earning more money, maybe having some stock options. Their investments are doing good as the stock market's up. And, those are the clients that are buying homes, second homes, investment properties that are keeping those markets hot. My big takeaway from some of this information is that if you're going to buy a home, buy it now. Don't get too caught up in reading how hard it is. Every single day, we have clients, multiple times a day, 10 times a day in a lot of cases lately, clients saying, hey, I got my offer accepted. What do I do next? Let's get the financing in order. Yes, there's a lot of cash buyers out there, but there's even more clients out there getting mortgages and financing these homes. So don't listen to what's happening out there. Yes, it's hard. Yes, it's overwhelming, but a lot of people are having success with it. A lot of people are winning. A lot of people are becoming, homeowners and hitting that major life accomplishment, and we are helping them get there. We're helping them navigate it and understand how to do it all. Appraisals, big concern. Every single, call I get when somebody's going to make an offer on a house, especially over asking, hey, is this going to appraise? Well, I'm not the one doing the appraisal, although we have a lot of information, right? We have access to tools. We have access in a lot of cases to comps. We can work with our trusted real estate agent partners to help us provide comps and all that kind of stuff. But ultimately, we're having a third party go out there, do an independent appraisal to make sure the bank and the lender knows what the house is worth. However, what I'm noticing is that we're starting to see a little bit less and less under appraisals. And the big reason is because now, the market's been hot for the entire year and even last year. We've been seeing, things go over asking price for months and months and months in these bidding wars. They're not a new thing anymore. So all the comps are closing. So an appraiser, when they go out to a house and do an appraisal, they look back, 3 to 6 months. Well, now all the deals that close in April and May are available comps that show home prices actually closing for much higher than what they were listed for. And the appraisers have access to that data and they can reference it in their new appraisal reports. And they can, communicate that on an appraisal a lot of times, on things like desk reviews and field reviews and all that kind of stuff. So we're seeing it less. It's nice to see because it was definitely a problem earlier in the year when there was a lack of comps and there was a lack of data. There's more data and there's more comps, and I think that's going to get easier and easier and easier going into the summer and the fall. However, that doesn't mean they're going to disappear. When you pay way over asking price, it's definitely something you should understand as a consumer. Hey, what happens if the house does not appraise what I'm buying it for? Make sure the lender is giving you options like, can you pay PMI? Can you switch loan products? Does that mean you need to come out of pocket with more cash? Do you have to take out a 401k loan? Can you get a gift? These are all the things, can you throw in a home equity loan or a second mortgage? What does it mean for you? Or does it mean you potentially be disqualified for mortgage and lose your deposit? Like, I know that's a scary option, but it's super important that you kind of go through those progressions with your lender and find out all the risks you're taking and what also, not just a risk, but also what the potential solutions are to navigate around an under appraisal, because there's a lot more solutions than there are, dead ends or roadblocks. That's what I got on appraisals for the month of June. And then got some really great home building data. As we've been saying for a while, guys, the biggest issue we're seeing in today's market is the lack of inventory. We've been saying that for years, but it just gets worse and worse every year. I think it's going to be a problem for years to come. Housing starts were down 9.5% in April, okay, which is much weaker than expectations. Not a good sign for future inventory coming on the market. Single family starts, which are really, really important right now because, we're seeing a big desire for people to buy single family homes. We're down 13%, also not a good indicator of future inventory. Permits, which are a forward-looking indicator, were up only 0.3% in April. Single family permits were down 3.8%. Builders are delaying starts due to higher commodity prices like lumber. The supply chain's been disrupted. Keep in mind, we had so many things that disrupted the supply chain last year. You had, we forgot about all the fires in California, COVID, and what that meant in terms of stuff getting shipped here from all across the world. Then you got the Suez Canal thing. You've got, it totally throws off everything. And so now you've got commodity prices just higher. So builders don't know what to do. In fact, what we're hearing about and seeing is that a lot of builders are pouring concrete foundations as they get their permits and just waiting for lumber prices and such to come down. Obviously there's also a lack of labor, stuff like that. So, the bottom line is that this means inventory numbers are likely to actually get worse before they get better. On top of that, you got sellers that are, in existing homes afraid to put houses in the market. So the key to this whole inventory kind of right sizing itself, because remember, a normal inventory is a 6-month supply across the country. Right now, we're at a 3-month supply. New construction is a major factor in terms of getting things back to where they need to be. And I just don't think we're there yet in terms of just all the reasons I mentioned. On top of that, hard it is for some of these clients either to find the builders to find land or even just get permits, deal with all the regulation, zoning, and all that kind of stuff. We certainly don't make it friendly for them. So bottom line, main issue is a lack of supply, lack of labor. New construction numbers are certainly something to keep an eye on and to watch going forward in terms of this inventory right sizing itself. So bottom line, here's what I'm going to leave it with you guys. Is housing going to crash? Absolutely not. It can't when there's way more demand than there is supply. And can prices keep going up? Yes, they absolutely can keep going up for many reasons. Same things. Demand, supply and demand is one key. We've got a lot of our clients, stock market's up. Unemployment numbers are going way down. Income numbers are going up, especially in certain sectors. And then the demand to move, whether it's single family homes out in the suburbs, second homes in vacation spots, but we're also seeing a big surge in the cities again. I'm seeing it in Boston, in places like New York. There's massive demand and things are getting faster again in the urban markets too. It's not just the suburbs that are crazy hot right now. As things are opening back up, people are moving back to what suits them. So bottom line is there's not enough homes for sale, right? Normal supply is 6 months. Right now we're at a 3-month supply, so lack of inventory is going to be an issue for us. New construction and new home starts and permits and all that kind of stuff are lagging where they need to be to help even up the supply issue. So that's one of the issues. Two, mortgage guidelines are stricter than ever. We had 10 years after 2008 where mortgage guidelines got very, very tight. It became hard to get a mortgage. And rightfully so. We verify income, we verify your down payment, we verify, your credit. And so credit standards are actually much higher. The average credit score back in 2008, 661. Average credit score today, 775. That means the people that have mortgages are more likely to repay their mortgages, not go into forbearance, short sale, foreclosure, those type of things, because credit's important. Other piece to that is that the amount of inventory across the country is at its highest level ever. Your average consumer has about 40% equity in their homes. Back in 2008, it was only 20% equity. So if somebody gets in a trouble where they can't afford their mortgage anymore, they're likely to just put it on the market, short supply. They're probably going to get a bidding war, and they'll get out of their situation and move on to the next thing. And then lastly, millennials are the biggest segment of home buyers out there right now, and they've got a long runway in front of them. And the three things are happening in their life. One, they're hitting their prime earning years. Two, they're getting married. And three, they're having kids. And all those things lead to motivation to buy a home. So they're motivated. Buying a home is really, really important to them. It's a major life achievement and milestone. And so that's a huge group. Over 33% of the home buyers out there are millennials. So that's what I got for you guys for June. I gave you guys a lot of information, probably a little bit longer than I wanted to go. Hope you guys are able to pay attention. If you have any feedback, any suggestions on what you want us to cover, hit us up. If there's anything I can help you guys with, direct message me or email me at shant@rate.com. Lastly, we're licensed in all 50 states, guys. Thank you for everybody that's trusted us and sending us clients that want to refinance or purchase in any of the new markets that we're doing business in. It's been amazing. So thank you. But if you're a realtor client that has clients that are relocating out of state, if you're a loan officer that has clients that you don't support and you're not licensed in, or if you're just one of our clients that are moving to somewhere you don't think we do business in, we do business in all 50 states. We'd love to help you. We're doing an excellent job in terms of bringing our service and our execution, our products, programs, and everything to all these new markets. And I think we're doing a great job. So we'd love to do more of it. So please give us the opportunity. Thanks, guys. Have a great June.